Well, Apple may have shaken up the AI arms race after unveiling its AI system, Apple Intelligence, get it, AI, this week, and announcing a partnership with OpenAI to integrate its technology into Apple devices. But where does that leave other mega caps like Microsoft? Deirdre Bose has been looking into that and keeping score in today's Tech Check. Dee.
Tyler, this is a leaderboard that can turn on a dime. Apple's a perfect example of that, going from AI laggard to potentially a leader in less than a week.
Oh, hi. Welcome back to my YouTube channel. In today's episode, I'm going to show you in a simple way why Apple stock was in a 200 billion rally. But wait, what if you don't even know what a stock is? Don't worry, I'm going to explain to you that as well. I want to tell you why you should have one and how to get one. So without further ado, buckle up.
Bloomberg reports that Apple is not going to pay OpenAI to use ChatGPT and instead believes that pushing it out to its hundreds of millions of devices is of equal or greater value. So Apple essentially getting for free what Microsoft spent some $13 billion on in OpenAI investments and diluting that OpenAI advantage for Microsoft. Now, as a major OpenAI investor, though, Microsoft could, of course, share in some of the gains that open up from this partnership, but it also raises questions about Microsoft's access to OpenAI's technology and the future of its consumer AI ambitions.
So, come closer. Closer. Let me tell you what the future is, according to the CEO of Apple. Apple finally introduced something called Apple Intelligence. This announcement was so much expected by the market because Apple is finally doing something different with its products. Instead of lying to us all over the years, they are implementing AI in Siri voice assistant. By the way, they are not innovating the market. They are actually copycatting their big technology peers like Google and Facebook. Those companies have been developing their unique artificial intelligence. The big difference is, for some reason in the US, nobody cares about Google or Facebook related phones. We just care about iPhones. Apple is teaming up with OpenAI to include its services for free, which is weird because it's Apple. Apple has been charging us for extras the entire time. Suspicious. It seems like it was in a strategy to detriment its competition. By the way, Microsoft is still the most valuable company in the world, just in case you want to know.
In the 1600s, the Dutch East India Company employed hundreds of ships to trade gold, porcelain, spices, and silks around the globe. But running this massive operation wasn't cheap. In order to fund their expensive voyages, the company turned to private citizens, individuals who could invest money to support the trip in exchange for a share of the ship's profits. This practice allowed the company to afford even grander voyages, increasing profits for both themselves and their savvy investors. Selling these shares in coffee houses and shipping ports across the continent, the Dutch East India Company unknowingly invented the world's first stock market.
If, after watching Dr. T's explanation, you're still with more questions than answers, don't worry. Please get comfy, grab a cuppa, put your feet up, and listen carefully. See stocks as regular products, because they are. Let's substitute the word stock with milk. The stock market would be the equivalent to the milk industry, and the stock exchange would be equal to the milk farm. Now, imagine that we want some milk, which is to be through our local nearest grocery store. But that grocery store is not the only place where we can buy milk. There are thousands of places around the world, thousands milk brands and flavors as well. Back in the day, when milk farms were invented, aka a stock exchange, just remember that we're talking about like stocks. Just a few people with tons of money have access to the milk because that's how rich people behave. They create something exclusive for their own, but over the time they realized that in order to make more money, as always, they need to open these opportunities to the majority of the population. Eventually, more milk farms were created, more types of milk were created, more brands of milk were created, more milk distributors were created. These factors contributed to lower the price of the milk and improve the accessibility to it. In summary, before, just rich people could afford to buy milk from the only farm in the world because that was the only place we could find some milk. Nowadays, we just go to our favorite grocery store, or we can even use our phones to do that.
So how do companies and investors use the market today? Let's imagine a new coffee company that decides to launch on the market. First, the company will advertise itself to big investors. If they think the company is a good idea, they get the first crack at investing and then sponsor the company's initial public offering, or IPO. This launches the company onto the official public market, where any company or individual who believes the business could be profitable might buy a stock. Buying stocks makes those investors partial owners in the business. Their investment helps the company to grow, and as it becomes more successful, more buyers may see potential and start buying stocks. As demand for those stocks increases, so does their price, increasing the cost for prospective buyers and raising the value of the company's stocks people already own. For the company, this increased interest helps fund new initiatives and also boosts its overall market value by showing how many people are willing to invest in their idea. However, if for some reason a company starts to seem less profitable, the reverse can also happen. If investors think their stock value is going to decline, they'll sell their stocks with the hopes of making a profit before the company loses more value. As stocks are sold and demand for the stock goes down, the stock price falls, and with it, the company's market value. This can leave investors with big losses.
Oh, poor little guy, cried because he lost everything. By the way, if you're thinking something like, how am I supposed to lose money in the market if I don't even know how to buy stocks? Don't worry, I got you covered. So, going back to use milk as a substitution word stock. The way we make the decision to buy our delicious milk in Walmart instead of Trader Joe's or Costco is totally personal, and we just know the real reason. But there are more convenience stores around the city, such as Aldi, Whole Foods, Safeway, 7-Eleven, the Chinese store around the corner, you name it. Guess what? To buy stocks is the same. There are a lot of different stores called brokers or trading platforms where we can buy stocks and other things. You might be wondering right now, what are the names of those stores? I'm glad you asked, but I'm gonna show you how to fish first so you can get to your own conclusions. Please do not hate me for that. Let's open a Google tab and type top US brokers. Google shows us a lot of reputable financial webpage with their opinions about who is the best. Let's skip the sponsored ones. We must always skip the sponsors because there is a high probability of bias. As we scroll down, we can see the big ones in the industry. Investopedia, Stockbroker.com, US News Money, the Motley Fool, Visual Capitalist, Digrade. I'm gonna go up and select Investopedia because it's my favorite. And no, they have not sponsored me, unfortunately. Investopedia, you watch this? Call me. Investopedia webpage show us the name of the person who wrote the article. In this case, Sean Ross and the date. I'm just closing the ads. They are so annoying. So, sorry for that. Sean, in his article, names the top 4 stores, and he describes a little bit of background at the beginning, then the products they offer, and then how much we're gonna pay for using each store, because we have to pay for using the store. It's called commissions. I've given all of that to show you the summary table with the names. And those are the names. Then I'm gonna click to daily investment to show you other options that we have. On the new web page, we can see another common one, a store name. Questrade Forex.com, Wealthsimple, XTB, and CMC Markets. So there you have it. Those are some of many stores to buy now. The choice is on you. One important factor to consider is that the dozen stores are from the USA. If you're watching this from other countries, you might need to find your own local stores. Some of these US stores may allow you to buy the bare milk depending on your passport, as always. By the way, this video is not being sponsored by any of the previous stores, unfortunately. If you want to know my personal opinion, I have read that Fidelity Investment and Questrade are the best to trade in the USA. I have never used them in my life, so I'm not speaking about my experience. I'm currently using Wealthsimple to trade in Canada, and in my opinion, it's the best option. But I know at this point in my life, and you, Wealthsimple, if you're looking at this, what are you waiting for? She's my hero.
Serious?
Finally, we need to consider another super important aspect. How are we gonna pay for our milk, aka stocks or stocks? Because the way we pay for it will determine the tax consequences. That's important. When you plan your finances, you need to take into consideration your taxes, as always. We can buy our milk with a credit card, with a debit card, with cash, with a check. Depending on our payment method, we might or might not pay taxes. We might or might not be allowed to use the purchase to lower our taxes. We might or might not have limits in the amount of milk we can buy. We might or might not drink our milk before we are old enough or pay penalties if we didn't wait the minimum time. That's how when we place mark by no paying taxes on things we should not pay taxes on. Those payment methods are the IRA, both Roth and traditional, and 401k, both Roth and traditional. If you're Canadian or you're interested to know about Canada, the equivalent of the previous ones are the TFSA and RRSP.
This seesaw of supply and demand is influenced by many factors. Companies are under the unavoidable influence of market forces, such as the fluctuating price of materials, changes in production technology, and the shifting costs of labor. Investors may be worried about changes in leadership, bad publicity, or larger factors like new laws and trade policies. And of course, plenty of investors are simply ready to sell valuable stocks and pursue personal interests. All these variables cause day-to-day noise in the market, which can make companies appear more or less successful.
That was a big key word. Appear. Appear to be more or less successful. It is what he said. And that is completely correct, because in reality, even if the market is trying to be regulated by the government or by itself, the majority of these movements are created by a lot of factors, such as manipulation of the numbers in the data, in the financial statements, or by deceived marketing practices, or just random popularity, such as memes or agreements between strangers. Thank you so much for staying at the end of the video. Please let me know in the comments if you wanted to get deeper into some specific topic or you might be really interested in. See you next time. Bye.